Hi, and welcome to the latest market analysis video from thestealthytrader.com. So as always, we're going to start the video off with a quick review of our website, www.thestealthytrader.com. Uh, we, our phone number is on the top left. We'd love to hear from you. Let us know how you like our videos. Any feedback is more than welcome. Our social media icons on the top right. The homepage is where we have our video, our latest videos. Usually you could see what is comprised in the video across the top left. And below that, after we put a new video up, the old ones compile on our YouTube channel. I definitely suggest visiting our prior videos to get a better feel for our methods and what we've discussed, as it does build upon itself each week. Um, on the right side here, you could see this is where members log in. Premium members have a few distinct advantages. They get real time. The keywords there are real time, which in a time sensitive business like trading, it's just like, what can I say? It's really that important. So this is where they log in, and they could review their holdings, our holdings, and receive educational component that we save for the premium members. Below that, here is our Twitter icon. Click on this and sign in, follow us on Twitter. Also, to join our mailing list, specials, updates. It's always good to be a member of our mailing list. A cool little button I found, call me. It You click it and it calls you. It is the same phone number that's displayed across the top. Let's see what else we have here. What other goodies on the home page? So below our YouTube channel link is a couple other reasons why our premium membership is something you should consider, and bullet points of why our system, our methodology might be so much different than the many others that are out there. So one thing I've noticed is a lot of services generate 100% computer-based lists, and regardless of what goes into those computer-generated lists, I personally don't think they could adjust quickly enough to the real-time adjustments that happen in the markets on a daily basis. So, as an example, what good is a list that says, well, these stocks are because this moving average crossed this area, or we have a divergence in these stochastics, we would buy ABC stock, when, right, that comes out Monday night, and then Tuesday morning the market opens 200 points lower. So these are really important things to take into consideration. Okay, so as I was saying, you could have the best computer generated list in the world, and it could come up with five great long candidates, and then the market opens and it heads south, it tanks, and you buy what a computer thinks are strong stocks, yet it's not in the same direction as the overall market. Uh, we are fervent believers in the correlation between the indexes and individual picks. That's one of the underlining tenets of our system. So basically, another example of how our methodology might separate us from the many others out there. Our process goes as follows: we have a watch list, and we do apply some custom filters to that. And this is where the computer generated part in our process comes into play. So yes, we do use computers to help trim what could be a huge population of stocks to look at. Once our proprietary filters pick up on certain indications, those stocks then go to another list. In that list, they get sent, or they get analyzed by a different group of filters and different indicators. So basically, to give you an idea, these stock choices continually get put through another batch of filters until they get to a point where human intervention comes into play and our traders take that basket of stocks, it could be up to 20, and we watch them, human eyes watch them. This way, we are much better opportunity of picking up if they are jiving with the overall market direction or if the market is moving in another direction and we want to avoid a false signal. This is really important, and it's probably the main thing that separates us. The ability to take a computer generated list and then via human intervention or human involvement is probably the better word, we're able to take it that last mile and fine tune it so that all we have all the ducks in a row and all we dot all our I's and cross all our T's, and our individual stock picks are in agreement with the overall market movement. Whether that market movement is for a day, 2 days, a week, which in the last couple of months has really been the case. So this is key. And I just really want to emphasize that. And that's what you're paying for with our membership. Okay, so then once human intervention has it, and once we see that it's jiving with the market direction, we will then come up with our execution plan. What's a good price? What's a good stop level? And then we send our alerts out to our premium members. Our basic members, which we're really happy to have you visit our site, watch our videos, and follow us on Twitter or StockTwits, where we get a lot of followers. Roughly 2 or 3 days after we're able to provide that information to the general membership. Okay, so this is moving down the page here. These are links to our different memberships. Premium membership. We also have Follow Trade membership, which is an affiliation with Ditto Trade, whereby if you're unable to be at a monitor all day or execute trades or keep up with our alerts, either you're at meetings or you're on vacation or you're taking care of your family or you just can't be tied to a computer. This is an incredible innovation for just that actually growing list of people that could benefit from our experience and our insights, yet not have to be tied to a computer. So click here and it'll take you to the sign up form and you can read more about it with videos. And again, for anything, we love to hear some feedback or ask questions. And that is right here on our contact us, to join our mailing list or contact us. And finally, we do have a learning academy, and this is great if you're really serious about either making trading a career, either one of you and your relationship has gotten displaced, or somebody is relocating for their job, and the other partner has to then figure out what they're going to do. A lot of people take up trading, and what a great way to start. Then have a service that could trim the learning curve down by, I don't know, I would say 5 to 7 years. All of us here have been trading about 15 to 20 years each, and our learning academy basically takes what we've learned, not only what we've learned, what to teach you what to avoid, save you tens of thousands of dollars, in addition to learning about our system, our methodology, how to pick stocks, how to do your homework at night, how to prepare for the market opening, and the 10 commandments of trading rules that you have to put that over your monitor to make sure you abide by that. It's a very tricky business, and this is really important. Okay, and finally, this is we use Ameritrade, where we have an endorsement arrangement with Ameritrade, whereby those that click on this link and sign up via our relationship with Ameritrade can share some of our watch lists, some of our filters, which right away is a shortcut. Talk about cutting the learning curve. This right here, utilizing our relationship with Ameritrade, is huge. So again, ask us about this with Thinkorswim. We really like it. We primarily use it as our analysis and our stock uh, watch list part of our system. Okay, so let's look at some charts. Okay, so here's a chart of the Dow. This is a 30-minute chart of the Dow. And so basically, if you follow our videos, this has been just a very up and down, roly-poly type of, at times lackadaisical, at times violently, uh, violent movements, that kind of a market. Something to note, as we were closed Friday for Easter, a happy Easter and happy Passover to our followers. Uh, the markets were closed on Friday, and we did have job numbers. Some important indicators came out on Friday, new jobs and so forth, the labor indicators, and they were not impressive to say the least. They definitely disappointed. So the way this market has been coming down recently, we're called to come in anywhere from 150 to 200 lower from Thursday's close. Thursday closed around 17,753, I think, or 17,763. That could take us right down to start around 17,650 if it comes in only 100 lower, which is this trend line right here from Wednesday, which Thursday ran up through. And that's the kind of market that's been. Thursday, just to refresh your memory, we rocketed on the first candle, came back for the rest of the day, and then the afternoon, very lazy, lackadaisical trade, and ended up in the middle of the range, maybe more towards the high. But uh, we clearly have been dropping, as I hope I don't give you vertigo here, but this is a high from Monday of 2 weeks ago. So we are down. We almost made new highs, 18,200, and we came down to 17,580 in a week. And then we came back up again last Monday, up and then back down. So net net, we could very easily come in right around here, 17,650. What I'm concerned about is this level here, 17,575, because that is the low that was made over here, and that was on the 26th of March. And this could be the reason the market needs to take out that low, and then there could be a good 400 or 500 point drop. Just as an FYI, and at the Stealthy Trader, we are we create scenarios for either eventuality, because again, another thing that distinguishes us from other similar type firms, or I use that term loosely, we don't try to guess where the market's going. We want to have plans for, in case any scenario plays out, what's the best risk reward opportunity for us and our members. So on the upside, so let's say the market opens lower here, holds 17,650. You'd have to say Thursday, right before the market closed, with Friday being off, 17,800. We have a little bit of a high here, and then clearly this high here, 17,900, 18,000. You get my point. Every 100 points, 18,100. So the upside is a much tougher road. It certainly looks like this market might test that 17,500 level. Let's take a look at the daily chart. Okay, so this is the daily chart for the Dow, and looks like there's a lot going on here, and scrunched up a little bit because I just want to make sure I don't lose that down channel that it broke out of. But so here it is. Monday, this is last week. Monday, Tuesday, Wednesday, and this was actually a relatively impressive candle on Wednesday, that it bounced off that key 17,500 level, closed in the middle of the range, and then Thursday was actually a little bit impressive. So now with Friday closed and Monday we're about to head into, this is that key level. We have a couple of bottoms down here, 17,585. That's key. If that doesn't hold, I wouldn't be surprised to see a test of the 200-day right here, 17,340. Of course, the important essential question is how quickly Another thing to be concerned about or to be aware of is this market has a tendency to break through a key level, close above it, and then go haywire in the other direction. That's why you can't marry. You have to check your ego at the door. You can't marry any one direction or any one indicator or any one pattern. It's like surfing. Anyone who's surfed, it's constantly being able to roll with the tide. So this is a 200 day. If we do break this key level here, we expect that. And we're one of the few peoples that see this sloping down channel that formed a while back that we broke out of and ran. And this has been successive pullbacks. Maybe this is forming another down channel, which is very possible too. We'll be watching for that. Actually, let's draw that right now. I'll show you how easy it is to do things with Ameritrade. Drawing channel. Let's see what would be a good one for that. So that would be this and this and so there you go. I just drew what could possibly be a second channel. Again, this second channel is a little bit sloppy. Channels are impressive or they're important when they have multiple points. 1, 2, 3, 4. This is one of those classic ones I was talking about where it breaks through a key line, closes above it, and the market goes haywire in the other direction. Look how many times it touched the upper end of the channel. And this whole time it was moving down, exploded higher. So the chance does exist, but then if you notice over here, even if it did form, it's forming another down channel. It's getting close to the 200 day. So I think we're going to be seeing 17,300 area or 350 in the not too distant future. But first things first. This is the daily chart. As I had pointed out in our prior videos, again, go to our YouTube channel. The 20-day is starting to get close to crossing the 50-day, which just might be enough to make this thing really head south. Here's a 200-day. So that's it for the Dow. We expect the lower open on Monday, and we'll be watching. Let's look at some stocks. Okay, so the first stock we're going to look at is GTN, Gary, Tommy, Nancy. And again, this was, I think, featured in our last video. We saw buying in this one. It passed all our filters as I outlined in the intro to this video. I would suggest going back and listening to that again. It really is important. Subtle, but really important differences between what we do and many of the other services that are out there. The the volume, the relative volume rang. It ticked off on our filters. The chart pattern ticked off on our filters, and we ended up buying. I think we got in around right here, 1325, and it ran and it consolidated, and there was no reason to get out, and then it ran again. So this is what happened on Thursday, and this is an important point to make also. Not only do you have to be sharp on picking up on what the market's doing and market behavior, but you also need to know basic rules of trading. We knew, and you should have too, if you're in the markets, that Friday was closed for Easter and Passover. Well, it was for Good Friday. And with a key number coming out on Friday, we did not want to take a chance with a stock that ran so nicely from 1250 area up to 1450 in a matter of 2 weeks. We just didn't want to take a chance, especially the way Thursday it came off. So we got out towards the close on Thursday. It'll be interesting to see what happens with a 200, 150, 200 lower open in the markets on Monday. We'll be watching this one for sure because most of our signals are still very bullish on it. So that's GTN. So one of the stocks that we want to take a quick look at is Capstone Turbine, CPST. This is an interesting one because it's a very polar company. Uh, we are technicians. I want to be very clear about that. We follow fundamentals to a degree, but we certainly are much more chart and indicator based. This stock seems to have a lot of fundamental opinion about it. They make turbines, and the interest in the company on the internet, the arguments are just wide and far ranging. It's kind of like the NCAs, the Final Four. It's just pro or con, and it's just no middle ground. What we do know, and here's the important thing, it is a 64-cent stock, so it's not something that we're going to spend too much time on. But we, what it does, the reason why it ties in with what we do is our filters have picked up on accumulation, the kind that we picked up on about, I don't know, about a year ago, that eventually led to a doubling of the stock in about, I don't know, about 5, 6 weeks. So, hey, happened once, could happen again. So this is Capstone. C. Charlie, Peter, Stephen, Thomas. And it's, again, 64. I would say that it would have to get over 70 cents. Well, first it has to get over 66, and then maybe over 71 cents. It has to get up to a dollar pretty soon, and at 64 cents, that would be a wonderful return just in itself. Capstone. That's all I'm going to say about this one. This next one is Coronado Biosciences, CNDO, Charlie Nancy David Oscar. And this one also, I believe, is profiled in one of our recent videos. And here's an interesting thing. So, talk about whether you're looking at day trading, swing trading, or an investor. More or less, is the three major candidates. The three categories. We consider ourselves in a lot of ways sway traders, a combination of day and swing. So, in other words, we put on a trade because we're looking for a nice move, but if we get 10 to 20%, which happens a lot, if we get that 10 to 20% within the day, we're going to lock in profits. Just it's the way we do things here. So let's look at Coronado, and this one has been good to us. This stock, we're following it. There are some really good indicators that there's some buying in this stock. It's a biotech, which is biotechs have been getting they've been coming back in a bit. They've been really strong for most of the year, and they've been taken out to the shed a lot recently. This is a what it did on Thursday. We can see the pink lines, and yeah, this is definitely a wedge pattern, and it ended by breaking through. But with Friday off, a lot of what happens the day before a holiday market closed, especially with key labor results coming out, people will just get flat because they don't want to take a chance. And so we're watching Coronado. Uh, there's a little gap down here to like 350, closed at 388. Let's take a look at the daily chart. Okay, so this is the daily chart in Coronado. I guess the important thing I want to say here is with a lot of these stocks, especially biotechs, you get some nice entries based on technical analysis, and then you get like nuttiness. I mean, this one was trading at 280, and then I don't know, 2 days later it got up to 540, $5.40. Closed at 420. So you definitely, if you're going to trade these stocks, and a lot of stocks these days for that matter, I see it all the time. You need some guidance, and you have to use your head. You got to be able to take profits, scale out. These are all things that we cover with our premium members. We take care of the entry and the exit, or we advise on that. This is what we do. So anyway, what we like about this is this candle right here. This is a daily chart, by the way, and you see how it kind of penetrated upsloping trend line going back to February of this year, early February, and it held these last 3 days. This is Thursday, this is Wednesday, this is Tuesday. So Monday was this major down day, and then complete opposite with that move up to 440. It has a lot of these spindles here, these long stems upside down. Not crazy about that. It just indicates volatility. But one thing that I do know, and what I do notice here, is that it kind of has a double bottom going here at 373. So if we should we get a nice lower open on Monday, we are going to be watching to see how this one handles the 372 area. And if we see what we like, we will not be shy about taking an entry because again, we kind of have an idea where the stop out area is, and that is really, really an important part of trading, putting the odds in your favor so that if you're right, you're rewarded. If you're wrong, you're not destroyed. You're not going to be right in every trade, but you could be wrong 3 trades out of 5. But if you get out at really great stop levels, and on those 2 trades that you're correct, you hit it out of the park, you'll do very well in this business. So that's it for this update, this market analysis video update, and love to hear from you. And info at thestealthytrader.com. That's info at thestealthytrader.com. I will get that email. I'm Jonathan, better known as ST, Stephen Thomas. And hope everybody had a nice holiday weekend and see everybody in the markets next week.